Revenue tops £200 million at Dechra Pharmaceuticals, up 5.1% year on year. Pre-tax profit coming in at £25.8 million. Joining us to discuss this is CEO Ian Page. Thanks very much for coming in. 203.5 to be precise in terms of revenue. A mixed picture though in terms of where that growth is coming from.
Yes, I mean, we're very mature now in Europe, so the growth rate there was slower. The constant exchange rate, by the way, revenue growth was 10%, and we tend to look at that as the underlying growth. But yeah, so about 4% growth in Europe, in mature markets, where we'd also got headwinds from our farm animal products actually going backwards. So actually, we're very pleased with the performance. But you're quite right, a mixed picture in the US. It was phenomenal growth at 60%.
Let's focus on Europe. And I know you say underlying growth, if we take out those currency headwinds, was 10%, but we have to factor that in the end.
Of course you have to take it in, because that's a reported result. We report in pounds sterling and half our revenues are in euros, so we've had that headwind with the pound being strong relative to the euro, and that is a factor you have to take into consideration. But if you actually look at the performance in individual countries, so you want to know how well that country is performing, you have to look at it on a constant exchange basis to show the volume growth.
But because it has had such an impact this financial year, is there anything you're doing to kind of hedge against it going forward?
We've got a sort of degree of natural hedging because we purchase a lot of the active principal ingredients for the pharmaceuticals in Europe, and therefore there's a degree of natural hedging. But no, we don't actually hedge per se. We don't forward buy currencies.
So going forward then, and I have seen a couple of brokers' notes saying they're sort of revising lower their forecast due to that currency headwind.
Yes.
How does that impact you in terms of your strategy?
It doesn't really impact our strategy at all. We're about trying to get better market penetration of our products in individual countries, and you know, we cannot be responsible, or nor can we influence at all you know, the exchange rate headwinds, and of course at some point you know, it's going to stabilise, and that maybe at some point it will go in the other direction, and then we'll see the benefits of it. So I don't think you should ever manage your business in terms of looking at exchange rates at all in terms of influencing your strategy.
Let's look at that market penetration. We'll stay with Europe. We'll go to the US in a minute because obviously that big market view, but let's focus on Europe. In terms of acquisitions, growth, you yourself have said, you know, you can do that. You've got what, cash of what, 13.4 million at the moment. What could we see in terms of that sort of growth, or is it all going to be organic?
No, well, if you look within the year, about half the growth was organic. A percentage of it was from geographical expansion. We've opened up in 2 new countries, in Poland and in Canada. And there's a little bit of growth that came from an acquisition we made about 18 months ago in the US, where we got a full year contribution. But in terms of the cash that we have on our balance sheet, we have announced that we've made a conditional offer to buy a business based in Croatia, which will strengthen our farm animal portfolio.
That's due to complete in November 2015. That's still on track?
It's still on track. It's subject to review by the Zagreb stock market in the first instance. We can't see any reason why they shouldn't allow us to move forward with the conditional offer. We have got the major shareholder who's got 69% of the voting rights to agree to sell as his stake, and we only need 75% to delist it from the stock market. So we're pretty confident we'll get that one over the line and take control of that sometime in November.
And how important is that to your strategy?
Well, in terms of our farm animal strategy, as I've said, we're in antibiotics at the moment, and antibiotic usage is in decline over concerns about antibiotic resistance, and vets are being more prudent in the prescription. And vaccines are a big growth area. The business we've got the offer in, Dechra, Croatian business, is focused its entire strategy around developing a modern vaccine facility. But it also it takes us more critical mass in farm animals, and it also gives us a bigger presence as a group within Southern Europe. So not massively important to our strategy, but in terms of our overall strategy, but in terms of farm animal medicine, it's a big step forward for us.
Will we see more of this kind of thing going forward? Do you have anything else in the pipeline?
We've got there are not many businesses to buy in animal health. It's a very consolidated market already, and we've got a very good track record of finding strategic investments over the years. So don't want to have to commit myself to say we definitely will, but I think from our track record it'd be evident that we are looking always at bolt-ons.
Because that's it. When you're in a very consolidated market, trying to grow a company makes it much harder. So what else are you looking at? Are you just looking at expanding what you do?
Four aspects to growth. Our existing portfolio, we believe we can still get good market penetration. Even our oldest, one of our oldest drugs that's been in the market for several years now in Europe, we've just got 10% growth out of it by better education of vets, by better focus. So our existing portfolio, we can continue to expand that's capabilities. But geographical expansion, we're getting more registrations in new territories. Last year we launched in Italy. This year we've launched in Canada and Poland. We've just announced that next year we're going to be launching in Austria, but we're also spending more money on the registration process to look at more developing countries that have got a bigger growth within farm animal medicine as protein's been eaten, as you know, high quality protein is becoming more prevalent. We've also got a product development pipeline that we're spending increased amounts of money on every year, and last year we launched a new drug called Osphos. We've just made a submission for a new endocrine drug called Zycortal that we hope to be able to launch in the next 12 months.
Okay, so that's the next. Let's look at geography and geographical expansion away from Europe. US, I mean, the growth there, 60% rise in business in the US. Yeah. As you say, your words, phenomenal. Yeah. Can you keep up those levels of growth? Well,
no, there's a degree, there's a percentage of that, about half of that is organic, the other half is made up. There's a product that was relaunched that had been out of stock for a couple of years, but there's also the full year benefit from the PSPC acquisition that has two principal products that we've done exceptionally well in. But we will see very strong growth in the US, but I think 60% is a one-off really.
So full year 60, what can we be looking at in terms of that growth, bearing in mind the currency headwinds you face this year, and can expect to face, I suppose, in the coming year?
Well, again, I don't want to be involved in predicting currency exchange, but we will continue to see steady growth within Europe, within our home markets. We are looking to increase our presence more in the rest of the world. You know, we have been a bit focused on the US and in Western Europe, but we're spreading ourselves a little bit further now. As I said, we've got new products coming through. The product we launched last year, Osphos, is starting to get real market penetration now. It's a specialist equine product. We believe that will drive some growth this year, and you know, the portfolio as a whole will continue to deliver results.
Underlying, you had a 10%, as you say, double digits. I'm putting on the line here, you know, can you expect to see that? You say you don't want to talk about currency, so underlying 10%, double digit?
You know that I'm not in the business of making forecasts in this situation, but and the simple answer to that question is look at our track record. In terms of earnings growth, we've got over 10 years of double-digit underlying earnings growth, and that isn't a forecast, but it sets a trend that clearly we'd like to try and maintain.
In terms of the share price, though, we are 11% off your highs we saw April, May time, as you can see there. Overall, though, I mean, up until then, we have a very much an upward trend over the past 12 months. What are you doing? What can you do to try and get back up to those highs and beyond it?
Well, I think there's been a little bit of a recorrection. I think the share price got a little bit overheated when it got over £10. I think it sort of found its natural level for now. And I think the answer to developing your share price is not to worry too much about it. If you do the right things and you keep delivering growth to the business, then the share price will look after itself in the fullness of time. I
mean, any investors are going to be saying, hey, you know, that's all very well, but I've just lost, you know, 10% if I got in at these levels. So what do you...
I think if you look at the majority of our shareholders, they've been with us for the long term, so there won't be too many that fall into that category, I hope. And what I would say to those people is, well, hang on and you'll realise value in the longer term.
OK, on that note, we will leave it there. Ian Page, thank you very much for joining us.
Thank you.